Welcome to this week's analysis from the 3rd of February to the 7th of February. This week we'll be looking at the Euro USD, the British Pound USD, the Aussie Dollar USD, the New Zealand Dollar USD, the USD Japanese Yen, the EURUSD and gold. As always, a quick disclaimer, today's analysis is for educational purposes only. All views or information is of my own opinion and should not be taken as investment advice. Forex is a high risk, high reward business and you should never trade with money you cannot afford to lose. That being said, let's get right into the weekly analysis. Here we have the USD on the daily. The overall downtrend is bearish. My bias is bearish on this pair, as you know, as long as price stays contained below a resistance area and this 1.12407 resistance area, and of course longer term resistance of this 1.12815. As long as price is contained between essentially this 1.12407 and this 1.11800 area, then my bias is bearish on this pair. What we can see that has happened over the fortnight or so ago, we have this bearish pin bar, that formed previous resistance at the 1.12407 up here level, and that was the catalyst for price capitulating in this downward movement. So you would have had opportunities to enter this market on several occasions, and indeed my clients did. The first being obviously this bearish pin bar here in area. The opportunity would have been through this bearish pin again formed at a static event area being resistance 11800 zone, remembering their zones. And the third opportunity that you would have had would have been, just draw an arrow here, through this pin bar just here, which formed at another resistance area at 1.11050, which I'll cover in a moment. So the upshot of all that is we are certainly in a long-term downtrend. My bias is bearish on this pair. We do have recent support, this line. We have recent support here at 1.09886, which price has bounced off on 3 occasions via this bearish pin bar here, again here, and just recently last week through this, bullish pin bars, not bearish pin bars, through these 3 bullish pin bars, price has been bouncing off this recent support of 109.886 or thereabout. So this is a significant support area. Of course, we then have support here at around the 109.296, and then the recent low of 10.8806 or thereabouts. So these 3 support areas are significant, as are the resistance. I'm not a fan of drawing a lot of horizontal event areas on my charts, but these are all significant areas. So I'll just erase that and I'll explain here we are, freehand. This 1.11050, you can see here it was previous resistance through pin bar. This was the area here which started the resistance, because it was here that price started to capitulate back to the low here of around the 108.806. Then of course we had this bearish pin bar here, which again formed pretty close to this 11050 zone, which capitulated price down to a low of 109.886. We then had another bearish pin bar form here of your third opportunity, 1050. So this one zone, this area here, this is significant resistance. This is an important area in my view. So as price action traders, what we're looking to do, we are looking to re-enter this market to go look for a price action signal, either to bounce back off again this 1.105 area, or preferably even up here 11800 area to allow us to sell on strength. So we will wait, and that's the name of the game. The money, the consistent money is made in waiting. So we will wait for a bounce in price, for a price action signal to form either again around this 1.1105 or indeed this 11800, and we will certainly retarget the best profit will be around this 109.886 area where price has bounced off. As I said, 1, 3, wait for a price action signal to allow us to sell on strength, again to retarget this recent area here where price has bounced, and then obviously we'd be looking for a further profit somewhere down here, but that's yet to play out. So in my view, there's nothing to do yet, but we will be waiting for a price action signal. Our charts are set up anticipating that, so when that happens, I'll be sending my clients my analysis and the setup, and we'll be shorting this pair once again. Thank you. Here we have the British pound US dollar. My bias on this pair is neutral, slightly bullish, but no one clearly is in control at this stage. As you can clearly see, we have support here, previous support at this 128.300 level. We had previous resistance here, which is now turned support at 900 level. This area here, its resistance here, has turned support via this here. It was at that stage, of course, that this consolidation was broken and started capitulating prices back up to form a new high around here. Huge looking bearish pin bar around the 134.200 area and above. So at this stage, that's what caused prices to capitulate up. Since then, of course, through this bearish pin bar, huge bearish pin bar, prices then have bounced down, and it's now really formed excuse me, another range bound area somewhere between this 129.902, 12900 area and this 13200 area here. So no one clearly is in control at this stage. What we do have, of course, now is price bouncing back off over the last week and a half or so, this premium turn support at this 12900 area here. So it's really a wait and see game. For this to go on to see a break of this area here, resist. So you'd want to see a break and a close above the high of these two candles, indicates that we may be back on the long side of this pair. And then, of course, if there's enough risk to reward, well, then you could very well take the trade if, in fact, you had a significant buy signal. On the other hand, of course, if price breaks through this recent support, we do have a series of higher highs here and here. We have a lower high, but then, of course, we're now back in this trading range. So the jury's out on this pair at this stage. If we get a close below this, well, then, of course, we have recent support back down here. So you wouldn't do anything, in my view, short or long, unless you had a clear break and close below this area. And then, of course, that might be the catalyst for price to coming down to around about here, or even this resistance area here. But failing that, if we get a close above this area here, then that could very well open the floodgates to price going back to its high. So there's nothing to do at this stage from a price action point of view. Again, our charts are set up waiting for an event. As traders, we spend most of our time waiting, as you know, but there's certainly no reason to be trading this pair at all. So I'll just wait and see what the market offers us over the course of this week. It's been a bit uninspiring since this bearish pin bar back up here. So it's a wait and see game, and just see what offers us before we make a decision on this pair one way or the other. Here we have the Aussie dollar, US dollar. The bias on this pair is clearly bearish. As long as price is contained below this 703.100 area here and the longer term resistance of the 707.85 area here, then my bias is bearish on this pair. We do have a fair bit going on here, so I'll explain the relevant event areas or levels, and then I will get into the analysis. So we'll start down here with the recent support, which of course is being tested as I'm talking to you now. Here we have recent support of around the 66860 area or thereabouts. We then have support here at 67240. We had further support here at 67545, and we also had support around this 68100 area here. This is where I took a take profit. We had support, and we had resistance in this area here. So this 68100 area is another resistance turned support area. Then of course we have resistance here, previous resistance at 68890 thereabouts, around here at 69261, and the other two resistance about. So my view on this pair clearly is bearish. What we are looking to do, now we've been in this market, we are now out of this market, we made a nice profit out of that. I'll just erase all of that. So what we are looking to do is certainly re-enter this market on a retrace, on a pullback, on a short-term bounce in price to allow us to go short again. There is substantial downward potential on this pair. Quite often price goes lower than what you think it's going to go. So whilst we have this recent low down here on the weekly chart, price has been a lot lower. So there's nothing to suggest that this won't keep going lower. You can see how far that price is trading away from the EMAs here. So there's a lot of momentum to the south. You don't need me to tell you that. Just clearly looking at the graph, the chart will tell you that. So clearly there's quite a lot of downward potential to come. So we will look to take advantage of that. We are looking to take advantage of a retrace. Obviously higher the better, but any of these significant areas here, this previous support, this support here, this 68100 where I exited my trade for a nice 1 to 3 return here, any of these areas here would be looking to take advantage of short-term bounce in price, provided we get a significant, and it has to be significant, sell signal, one of the 3 signals that we trade. Then we would re-enter this market to retarget whatever the recent low may be. So right now, of course, it's down here potentially, but it could be potentially lower because price goes higher and lower than what you think it's going to go. So that's my view on this pair. It's a wait and see game, like most pairs right now in the market. We've had an opportunity to make some profit over the last 2 weeks, which is great. Now we're waiting for pullbacks or retraces, or for our price action signals to happen at an event area, so that we can get back on the profit side of things. But for now, we're going to wait for a retrace in one of these areas here, or even potentially higher. That would be great. But for now, we just wait for that, and we will be taking a short entry on this pair at some time in the future. I am sure of that. Thank you. Here we have the New Zealand dollar, US dollar. The bias on this pair, as per last week's analysis, is bearish. It remains bearish as long as price stays contained below this resistance area here of 67515, and longer term resistance here of around the 67860 area. As we can see here, we have support. Previous support here at 64853 or thereabouts. If you were to zoom out from your charts, you would see that this area here was a significant support area previously. My clients and I have been in this trade. We exited this trade at this support area for a nice win. So we're now looking to re-enter this market, waiting on a price action signal to go short. So the overall bias in this pair is bearish. We do have some resistance here around this 64490 area, and we have previous support here at the 63270 area, and of course support here at around this 62392 area. So for us, we are looking to enter this market on any price action signal that would support a short trade. We have a lot of momentum here. You can see through the EMAs right here how far price is trading away from the EMAs. That's a really good indication that clearly the bears are in control, and I can't see too many reasons why we shouldn't bust through this recent resistance, which was actually turned support. This area here was previous resistance, but it has turned support through this candle here. This bullish candle here turned resistance into support. Given the fact that we have a wide gap here of the EMAs, and given the fact that we do have momentum on our side and the downward trend, I don't see this area here where price turned around as being such a big deal. So in other words, should we get a close below this resistance area around here, and below here would be preferable, then clearly we're on a downhill spiral, and you would be targeting here and then here at lower support. So from my view, we are short on this, well, not in this trade at the moment. My bias is short on this pair. I am looking to enter this market as I'm talking to you, to take a short position. That is for my clients, of course, but I do have a very bearish bias overall on this pair. Cheers. Here we have the USD Japanese Yen. As I mentioned last week, my bias on this pair was neutral, slightly bullish. That was because we had a break here of this large consolidation. It had been going on for quite a long time. It's just been in a choppy sideways movement between this 107,900 area and this 109,700 area here and here. So of course that break didn't lead to anything. It created a new high around this 110,240 level here, and then of course capitulated back down. So for now there's nothing to report on this pair. It's now still continuing in its sideways motion, so there's really no bias one way or the other. I'm neutral on this pair until we get a clear break, continuation of either the upper level of this consolidation period, or of course if we get a clear break below and a close below this 107,900 level here. So for now, like it has been for quite a long time, this pair is simply in a wait and see what happens. Let the market give us something. It is quite a large range bound zone, so for those of you who want to trade range bound zones, that's fine. I prefer not to. So there's really nothing to report on this pair. It's been as boring as anything. The trend has been up, of course, recently, so we'll wait and see whether that continues, but no need to be trading this pair at all. It's just a wait and see game. Our opportunity will come, but of course we won't be doing anything until we get a clear signal here once again, or of course below here, the 107,920 level, to confirm whether we'd be long or short on this pair. Either way, the signals would, our buy or sell signal would have to be very, very obvious, because there are better pairs to trade than this pair at the moment. So for now, it's just a wait and see game. It's just consolidating. Of course, as you know, after every consolidation there's a breakthrough, but for now it's just wait and see what happens with this pair. So nothing to report on the US dollar Japanese yen. Cheers. Here we have the Euro Japanese yen. My overall bias on long-term bias on this pair remains bearish. If you zoom out to your weekly chart, you'll see it's in a clear long-term downtrend, even though since around about August of last year, so September, October, November, December, so probably 4 months or so, we have been in a uptrend on the daily. As you can clearly see, we have higher lows, higher lows, higher lows, higher highs, series of higher highs, and more higher highs. Overall bias, however, long-term bias, is bearish. So what we have here, we'll just cover the relevant levels first of all. Way down here at around the 115,830, we have support. We have support here around 117,100 area. We have resistance here at around the 119240. That has now turned support through this candle here, this event area, the swing point. We have more resistance here, previous resistance at around the 119784 area or thereabouts. We have previous resistance here at around the 12120 level, and of course most recent long-term resistance around here, or short-term resistance rather, around here at 122630. So my analysis on this pair is, as I said, bearish. What we can see here is this was previous resistance here, as I mentioned, around the 119784. Since then, that has turned to support through these candles just here. We have this inside bar structure. That was the catalyst for price that was where price began to pop up to this area here. So this area here is interesting, is a very interesting level on the chart. You can see now that price has been 119784 support area back here. So clearly from a price action point of view, we would want to see a break of this area here and a close. But then of course we have overhead resistance, well, previous support here at the 119245. So from a price action point of view, there's nothing to do here except wait for a signal to form, and rather than wait for a retrace, in this instance I'd be waiting for a sell signal to close and break below 9245 area, somewhere around there, to be clear of this previous support area here. So that's my analysis on this pair. There's nothing to report initially, but it is on my watch list as a sell at this stage. So again, we'll wait and see what happens. We did have this very bullish pin bar here, of course, which resulted in prices capitulating back up a couple of weeks ago. So all in all, the overall bias, as I said, is bearish on this pair, but there's nothing to do. It looks like price is just having a little bit of a tussle sideways, catching its breath, make up its mind which way it wants to go. I am leaning towards more bearish, as I said. So we will wait until we get a price action signal, or if we in fact get a break in the close below this, just to recap, below this 119245, and should that happen and we get a clear sell signal, then we'll be targeting, of course, down here, 7112 area. And if there's enough momentum, then of course we would retarget the low of 115830 area, somewhere there. So for now, that's my analysis on this pair. Again, nothing to do. It's just a wait and see game like most pairs at the moment. But should we get a close below the 9245, then we'll be looking to enter short. It could open the floodgates for a bigger move way back down this way. Cheers. Here we have gold. As I mentioned last week in my analysis, my bias on this pair is bullish. In fact, we are long on this pair as I'm talking to you. We are on a long-term uptrend with gold. As you can see here, we have resistance here at around the 1556 level. We have resistance here at around 1535. This has now turned support through this. As you can see, over the course of about a week and a half ago, we had this beautiful looking bullish reverse pin bar form excuse me, right at previous resistance at 1535. So this is acting as support, this level right here. Also, what has happened is at this previous resistance at 1556, this area around here, we have another series of pin bars just in here as full, and of course price capitulated up from this bullish pin bar forming here at this previous resistance turn support. So for us, we are, as I said, we are long in this trade. Price is currently respecting the EMA. You see, we do have some what looks like some minor resistance up at this level here around the 1587, so we'll see what happens there. Of course, as buyers, we would like that to be broken. But we'll wait and see what happens. For now, prices are respecting the EMAs, so that's fine. I would expect price to come to around the 1610 level up here. This area up here has been long-term resistance, so I would expect a major resistance at that level. So our take profit is around that area. I think price will struggle to get above the 1610, 1620 area, but for now we are long. There's nothing to indicate that would be on the short side of this, nor is there anything to indicate that we would exit our trade prematurely. So for now, again, we maintain our long position on gold, and we'll just wait and see what happens in due course. But again, as I said, these resistance areas here have now turned into support, and again, we had this bullish pin bar here. We had another series of bullish pin bars over here. So that all stands us in good stead that for now the bulls are in control anyway. We may get a little bit of a pullback at this, get rid of all that, at this minor resistance area here. Of course, that happened yesterday, and as I'm talking to you now, looks like we're getting a little bit of a pullback. We'll wait and see what happens with that. But for now, as I said, it's respecting the EMA, so I expect price eventually to capitulate and head back up north to around the 1610, 1620 area, where I said I think it will experience major resistance. I think it'll struggle to break through that area any time in the short term. Thanks.